Good afternoon, traders, and welcome once again to Stock Market Movers, the #1 morning show in the afternoon to get you guys ready. Let's dive on in. Today, we'll get through all the headlines, and we got 3 interviews today, guys, to get through in 1 hour. There's going to be a great show for us. Let's talk about the topics that we'll get into. We'll talk about the stock market gainers, earnings this week, Fed outlook, wheat news, Phillips, Newmont, Goldcorp, Weber Grill, WWE, what's going on in the World Wrestling Federation? Definitely we'll see what happened. World Wrestling Entertainment now. Got to say that right. World Wrestling Entertainment has some really interesting news, and it's actually going up on it right now. We'll take a look also at the inflation, and we got an interview from TNXP coming on up, one of the major gainers on the day. We have a good show for you guys. Guests today will include Shawn, Cruz, head trading strategist at TD Ameritrade. That'll be at 1:15. Then at 1:30, we'll get into it with Seth Lederman, CEO of Tonix Pharmaceuticals. And then at 1:45, we got Michael Lee, founder of Michael Lee Strategy. Can't wait to dive into all today's show. So let's go ahead. Let's dive on in. Welcome to Stock Market Movers with your host, Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right, traders, and it looks like we're in the battle here for the overall market. We'll take a look at what's going on in the action right now. If you look at the hourly, we're kind of sideways action here above the 395s. We'll see if we can get back towards the 400, or do we break below the 394 in today's intra-trading action. Now, one thing that I have been seeing, right, is the earnings stocks. And I think it's important to kind of notice here, as of Friday, 21% of companies have reported, right? And of those S&P 500 reported companies, 70% have beat the analyst expectations. Why is this important? Well, of course, we have to ask ourselves as investors and traders out there, are they just lowering the bar far enough for them just to come above those expectations? And it's something that we were watching for, right? Are those revised earnings low enough here for the companies to come in and beat those expectations? As you can see, 70% beating the expectation. So something to keep watch, right? And something that we're going to watch this week is, of course, the earnings stocks for this week. I have a kind of a calendar here from, of course, Benzinga. You guys can check this on out. Of course, we'll be watching for the market open tomorrow. UPS, Coca-Cola, McDonald's, GE, 3M, and of course, other stocks that report after the close tomorrow is going to be important. We will be putting on these earnings calls, so check them right here on Benzinga. You don't got to go anywhere. I'll make sure to have those earnings calls tomorrow after the close. That's where they really start getting moving. And you can see stocks like Microsoft, GM, Alphabet, Chipotle, Visa. It's going to be an important one. We'll keep watch, of course, some of the major moves, and it's going to be something to watch, as this is what's going to be driving the market this week. You know, beats could really kind of help us get through the next level on the upside, or we could see miss expectations. Next thing you know, we're heading back down towards the lows. So keep these on your radar. What other things should we be watching this week? Well, of course, we got the FOMC meeting on Wednesday. We'll get the report out at 2 p.m. and the conference where the fireworks start at 2:30 p.m. Eastern time. Now, everyone's asking, what will the Fed do Wednesday? We'll talk about it with our guests coming on up. But something that I'm going to keep watch is the CME Fed Watch tool. It's widely expecting a 3/4 point hike rate, so 75 basis points. And on Thursday, we also get GDP report estimated at 0.3%. We're going to talk a little bit more in depth with our guests that are coming on up that are more experts on this. But one thing that I'll be watching is the 100 basis points still on the table, right? Could that be a possibility? And then when it comes into GDP, will we get another negative reading? Because that's going to definitely bring in talks of that technical recession, right? Two GDP reports coming in negative could technically mean we're already in a recession, even though the jobs market is strong. I'll also talk a little bit about the jobs market coming up with Michael Lee. So the experts today will get the hard questions. I'm just going to go ahead and point to them. Let's continue going. Let's get into what was hot and what was not. That's the important part here. Taking a look at the sector outlook and the rotation that's going on in the intraday market today. Energy taken off here, leading us, guys. So I traded energy to the upside today. I don't know if you guys did. I'm happy I was able to catch the rotation really quickly here. Names like XOM getting a nice little lift today. I traded this one, so full disclosure, I'm out of this one. Was in and out multiple times on it. Now up there towards 89.63. I like the daily candle. Really just put in a strong candle today. Would like to see it close above 89.30s to really show us some strength here in ExxonMobil coming back on up. Of course, this is coming with oil bouncing at the same time. You see Oxy pushing back. So Warren Buffett, don't mess with Warren, man. I know a lot of people were thinking this was going to break down, but this is holding up. Now coming on back there towards the 63s. You saw also Phillips make a nice little move on up. Take a look at this 5-minute chart. Nice little push on up. We'll see if these can continue making moves. Another one you can watch for the day trade is that Gush. I like that one. That one made a nice little lift. We'll continue to see how the oil trade continues to trade. Now, that's it for what was hot. Now, let's get out of what was hot. Let's go into what was not here. So what was not hot was technology and consumer cyclical. So you guys can see here, I'll first go to technology. What was getting hit in technology? It's important to kind of note. Well, I'll set up my industries here. I'll go to the software application. Those were the names that I saw getting hit the most. So if we go by capitalization, you'll see stocks like Salesforce getting hit hard, Intuit, SAP getting hit, Team getting hit hard. Now down 2%. It's bouncing a little bit. Was down about 3% just a little while ago and could be down further by the end of the day. Shop coming back down a little bit there towards the 36.92. Snow coming back down a little bit. You can see these really pulling back. Datadog pulling back there. And even stock that was pushing with the Bitcoin pushing back, Coin, you can see that hard turnaround there. Couldn't even get to the 80s right now. We'll see if it catches a bounce. But these were weak right now. Last one I'd take a look at was like a stock like HubSpot. It bounced. It was trying to get on up there, but just can't hang on. These could take another leg down. We'll see what happened there. It's something to definitely keep on watch. How the expanding effect of the earnings comes in this week is something to keep on watch because you're going to see a lot of these technology stocks report, right? What will happen by technology by the end of the month or the end of the week is something to keep on watch. Do we get a move right back down to the downside on a lot of these growth stocks? Or do we hold some of those May lows? We'll keep on watch. Another getting out of what was hot and what was not. Let's go towards the wheat stocks here. The wheat futures were rising here. I was going to take a look at wheat itself, and we'll go ahead and I'll show you guys that chart. It's not looking too bad. Sideways action right now. We'll see if it can get back above the 8s. And so this is the Tukrium Wheat Fund. You know, we've had Tukrium on here, so I'm going to go ahead and mention them. But what happened here? Of course, this is coming off the heels of the reports over the weekend of Russian missiles hitting the southern Ukrainian port of Odessa. And the course is causing concerns because they just recently signed a grain deal on Friday. Yet Russian troops were shelling fields to prevent local farmers from harvesting grain crops. This is going to be important as you're going to see mentions like this. Ukrainian President Zelensky calling the strikes on Saturday acts of barbarism. And you're seeing what now? You're seeing wheat come on back. So the question is, would that deal really come through after seeing what we saw? There could be talk that the deal gets pulled off. We'll see what happens there. We getting a little bit of a bounce in pre-market. Got all the way up there towards $8.22. Now is at the $8. We'll see if this can close green on the day. Something that I will keep watch. Let's keep going through the earnings. We got a lot to talk about today and a lot of interviews as we're going to get 3 back-to-back interviews today. So smash the thumbs on up if you're excited to hear from the experts coming on up. Can't wait to dive on in. First one's going to be, of course, Shawn Cruz at 1:15. Then we'll have Seth Lederman at 1:30, followed by none other than Michael Lee, founder of Michael Lee Strategy. And I got some great questions to get into. And Zunaid will be joining me for Seth as he jumps on in for a little special interview for you guys. So smash the like if you guys are excited about TNXP coming on up. And let me know in the chat if that's what you're here for. All right, catching up with the chat. I'm seeing a lot of talk on out there. We're about to dive on in to our first interview coming on up, but it's do got a couple more headlines to get through. Let's go into Phillips here. So that's PHG. Let's see how this traded after earnings here. You guys can see here, it fell short of the analyst forecast at the Q2 of 15 cents per the EPS, and the revenues were at 4.45. You can see it has been catching a little bit of a bounce here. We'll see if this can continue making moves on up, but the daily chart just doesn't look like the best for me. Let's get into another disaster stock right now. NEM, look at this disaster move here in gold. And the question that I asked this morning on pre-market prep, is gold an inflation hedge? Well, you definitely are getting it here that it hasn't been that and hasn't been that for a while. Newmont heading down there and it just leaked into the open here. Newmont EPS coming at 46 cents, missing the 91-cent estimate. Sales were at 3.05 billion, down from 3.06 billion year over year. And gold cannot catch a bounce at all. It's definitely getting hit. You can see here the industry overall down about 3.5%. And it's not just NEM. It's taking down some of the other players like gold, like AU. So keep watching these. These are dragging right now. GLD getting dragged. A lot of that on Newmont Corporation here, definitely getting a hit on the downside. We'll see what happens with NEM, if it's going to be able to catch a bounce or not. But it's time for our first interview. I'm excited to dive on into it. Like always, guys, this is the show where we get through the headlines and get to the experts to keep you guys in the informational edge. Like always, hit the thumbs on up. When we return, we'll get into it with Shawn Cruz here. Let's go ahead and dive on in. Check out Benzinga Pro if you guys haven't done so before. All you got to do is go to pro.benzinga.com and get your 2-week trial today.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates, and the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
All right, traders, let's go ahead. Let's dive on in. Let's bring on Shawn Cruz, head trading strategist at TD Ameritrade. Welcome to the show, or welcome back, Shawn.
Yeah, thanks. Thanks for having me. This is a big week. A lot to talk about.
Oh, it's definitely a big week, and I mean, a lot of traders are watching. Is this just kind of that technical, dead cat bounce, or did we put a bottom in on the year? What do you see on the charts?
Yeah, I mean, I think we're gonna find out this week if this is a little bit of a dead cat bounce. I think right now the market is drifted back. Some of the big issues that were overhanging the market have somewhat abated a little bit. I wouldn't say we're by any means anywhere near being in the clear, but I think if you look at the biggest, I think mover, the biggest changing fact that we're looking at was just that strengthening dollar going up to 108 and pulling back a little bit. I think that's a good sign. Some commodity prices falling, although that's likely because there's an expectation for a drop in demand. Might also be helping here a little bit. Put a little optimism into the market, but we're going to have to get through this week. And the reason why this week is, I would say there's three big things to keep an eye on. One is certainly going to be earnings from all the FANG names minus Netflix. Certainly, I think it's going to be interesting to see what we hear from Microsoft because they had a little bit of a downgrade or a lowering of their forecast. So a lot of these earnings definitely going to be something to keep an eye on. You also have a lot of economic data coming out this week. If we didn't have earnings, if we didn't have a Fed meeting, I would still say this is going to be a huge week of headlines just from what we're getting on the economy. We get some new home sales data. We also are going to be getting some durable goods data. We get GDP for the second quarter to see if we hit 2 quarters of negative GDP growth. I call that a recession. I guess not everyone does. And then on Friday, we get a lot of employment price data and consumer sentiment data out as well. And all that with a Fed meeting plopped right down in the middle. So this is a huge week. And I think the market can really break one way or another, just depending on how this data comes in.
Something that we're all going to be watching. Let's get into a little bit of that economic data coming up. Do you feel that the Fed still has 100 basis points on the table? Do you think that could happen? And how would it affect the market if the Fed would go full hawkish here with 100 basis points?
I think the market might get a little bit caught off guard. Right now, they're pricing in about 75 basis points. To me, that's the base case for this Fed meeting, so 0.75%. If you get 100 basis points, I would be a little bit surprised just because a lot of the data that's been coming in shows that 75 basis points has been enough. If you look at what's going on with housing's been slowing down. If you look at employment and those weekly employment insurance claims, those have actually been on the rise. So it looks like there's a little bit of a headwind hitting the labor markets. And then once again, like I said, all those commodity prices that we keep an eye on that have been driving this inflation down channel, be it in the commodities complex, looking at crude oil, or you're looking at some of the more agriculture related commodities, those have all been coming down. So I think the Fed right now is really in a good spot to continue with another 75. If there was concerns that, hey, 75 isn't getting the job done, housing's still taking off, employment's still incredibly strong, commodities are still elevated, I think we would be looking at 100, but I think 75 is the base case. 100 would, I think, shock the market and send us lower.
All right, let's have a fun little game here. Let's play over under. I'm a big sports betting fan, so let's do over under on GDP expectations, 0.3%. Of course, last time coming in negative. Over or under here?
I'm unfortunately, I think I'm going to have to go with under. Especially when you look at real GDP, when we adjust for some of those inflation. It's one thing if we're spending more because we just genuinely want to buy more stuff, but it's not the same if we're spending more because we're buying the same or even maybe a little bit less, but it just costs more. So I think right now, if you're looking at what's going to be coming out, they're going to look at that inflation adjusted number for the consumer. And I don't think it's going to be pretty. So I'm actually expecting under. If you look at the Atlanta Fed, they put out their estimate of GDP. It's actually pretty, I think, a good tool just to get the direction of how the data is coming in, because they've sort of recalibrated every time we get some updated economic data throughout the quarter. And they're also expecting a negative print, at least from what we've been seeing and how things are coming in.
Definitely something to keep watch. I've been looking at it, and I saw it in American Express earnings last week was consumer demand and credit card spending going up through the roof. Do you feel that you're starting to see some concerns about consumers out there? And do you feel that we're just starting in the demand destruction?
Yeah, I mean, I think if we don't get some moderation out of inflation, you're going to see further demand destruction. I think the Fed making things more expensive might impact some of those larger, more durable goods type purchases, larger purchases like cars and housing. But we were already starting to see a little bit of a switch out of consumers from more of those durable goods types of purchases into services. So I think there's already a little bit of a handoff going on there. So I think the consumer's healthy. The question is, where is it really just the higher income consumers that are still able to go out there and spend? Is that maybe going to be enough to offset weaknesses elsewhere where they're a little bit more sensitive to food and energy prices? That to me is really going to be key here. And I unfortunately, I think the impact of this massive run up in food and energy is going to impact a large enough swath of the U.S. consumer population that it may not offset, what we're seeing anecdotally from American Express, which is probably going to skew towards the higher end of the income range.
Now, of course, we've been seeing the fluctuations in energy, and we just recently got a bounce looking strong today. How do you expect to see energy going into winter?
Yeah, that's going to be the big key. There is going to be what the supply outlook looks like. Right now, it's a little bit up in the air. We have an OPEC meeting coming up August 3rd. Russia just came out and said they're going to start, reducing significantly the amount of energy that they're pushing through over to Europe. And then there's a lot of uncertainty out of countries like Libya. Where is their production going to reliably be online or not? So I think the demand side of there is going to be an imbalance. There's going to be more demand than there is supply. We'll at least put some sort of an underlying bid here in the energy markets. The question will be is it so undersupplied that you actually see energy prices run back higher? And it's going to be worth it to not just focus in on crude, not focus on gasoline or natural gas. You're probably going to want to keep an eye on all three. If it's really just focused on the Europe supply demand issue, that'll probably play out more or less in the natural gas market. And you can see maybe the potential for further upside in natural gas. But if you're looking just more at the global economic outlook, I would say that will probably play out more or less in the crude market.
Love it. Love the scenarios there and playing it out for the viewers. Appreciate you coming on today. Shawn Cruz, head trading strategist at TD Ameritrade. And I did get a question in your chat about your Twitter, so I just threw it up there. You guys click that link, give Shawn a follow. He's definitely a good follow to have. Appreciate you for coming on.
Thanks, everyone.
All right, let's go ahead. We're going to continue going in a few seconds. We're going to get into our next interview that's going to be on TNXP. So I want to first get through some headlines here. I got about 2 more headlines to get into. Then we'll be getting into our interview. I do think that there's some people in the chat joining in here for TNXP. Just throw up a TNXP if you're here for that. I want to see what the chat has to say. Let's dive on in. I thought that was a great conversation to get us started there on with Shawn. We talked about, is this a dead cat bounce? What's going to happen with energy going into winter? And the Fed outlook, really. I mean, we'll keep watch. I hope that you guys enjoyed the over or under game. I didn't catch to see if you guys put a bet out there. Let me know if the over or under. I did see some unders mentioned in the chat. So let's continue going. Let's get into the headline of today on Weber Grills. So we're going to get out to check out WEBR. So if you guys don't know the ticker, check that on out. It is getting hit hard after the CEO is departing here. Also suspended dividend and pre-announcement of net sales. We've talked about how we're going to look to see if we could get continued pre-announcements here. You guys are getting a pre-announcement for the 3-month period ending in June 30th, pegging net sales between 525 million and 530 million. It says its performance was hurt by slower retail traffic. And just to kind of note here, it's coming in at a net loss of 51 million compared to a net income in 1 year period ago. So definitely not the outlook that you wanted to see there in Weber, as you're seeing it get hit hard there. I don't know about you guys with Weber Grills, but it looks like no one's going out to buy it this year. as, of course, inflation, higher prices, probably even the prices of these grills went up. So it's a tough environment for Weber Grills here. Let's continue. Let's get into the next one here, which is WWE. Why is the World Wrestling Entertainment getting a nice suplex up today? Let's talk about that. That's all based on the board of directors announcing a new co-CEO, and she's been a part of the team for a while. But Stephanie McMahon and Nick Khan are co-CEOs now. Of course, is coming off the heels of Vince McMahon's retirement announcement this past Friday. And World Wrestling Entertainment sees Q2 2022 revenue now at $328 million. It did get an upgrade today by Luke Capital, upgrading World Wrestling Entertainment to a buy, raising the price target to 90. And you guys are seeing a couple of raises on analysts out there. Look at the daily candle on this. Longer term candles on looking really nice for a weekly breakout as we got up there towards the 68, pulled back to the line. Now really starting to throw it on out there. We'll see if it can get back up to, let's say, first stop for me is 75. After that, you can get up there towards that 90 price outlook. Something to keep on watch. It's not really something that I trade often, but World Wrestling Entertainment getting that lift today, and something to keep on watch to see if for some reason we hear mentions of, last time I heard in the pandemic, this was being thrown around as potentially an MMA target. Who knows? Maybe here someone steps into play, but Luke Capital upgrading price target to 90. It could very much, it's looking good on the charts. All right, so I'll get out of WWE, and yes, we don't have to worry about WWE no more. I'm going to go ahead and bring on my fellow co-host from live trading. If you guys haven't caught live trading before, that's where we do some live trading every single morning. That starts normally at 9:05 a.m. Let's bring on my man, Zunaid, in the house. So definitely you guys smash the like. Get it on up there if you guys are excited about the next interview that's coming on up. And in just a few seconds, we'll be getting an interview from TNXP's CEO. What's going on, Zunaid? Welcome to the show.
Appreciate it, man. Yeah, should be a fun interview. I mean, look, monkeypox has kind of been the conversation amongst traders and investors as well this morning. And one of the tickers is, of course, TNXP. So what we try to do is try to get you conversations in real time as much as possible, because we don't want to bring in executives if like a month from now or a couple of weeks from now, because right now is when the move is happening. Right now is where the conversation is happening around monkeypox over the weekend. You did go ahead and have the World Health Organization, where they declared monkeypox a public health emergency of global concern. It's my opinion that because of that, you've got a stock such as TNXP moving. So we'll hear from the head, the CEO, Seth himself, and kind of just gauge how the company is best set up to handle this situation. I don't want to say take advantage, but to handle the situation and make sure that they can get in front of it if this does get a little bit crazy. So it should be a fun interview. I'm looking forward to it.
Yeah, something definitely to keep on watch. We'll see what happens. I mean, what comes out of these concerns, right? It's a lot going on right now. It wasn't only TNXP that was moving on this. There's a couple of names that were moving, and you're going to see a lot of mentions. So what we want to do is get you into the informational edge. That's what it's all about. So that's what Zunaid's coming on here to have an interview just coming up with the CEO. We want to know what's happened. If you guys got a question that you want to ask, throw it up in the chat now. Let us know. Hit the thumbs on up. If we get over 150 likes, we'll take a stock or a question from the chat coming on up. But Zunaid, it's definitely interesting to kind of get to these stocks, especially when all eyes are open. That's what you're kind of talking and alluding here. And definitely look at this move that we put in today. It's been a decent pop back up. The question is, where do we come into resistance? I say somewhere around the $2. It's something that I'll keep on watch. TNXP having a really good lift, and we've been seeing biotech be a really trending industry, especially the last kind of month and a half. Something to keep on watch. So what I'm going to do is I'm going to go ahead and get on out of here. I'm going to let Zunaid take on over, He'll go ahead and introduce the interview, knock it on out, and I'll be back after that. So Zunaid, take it away, man. Do what you do best.
I appreciate it. Thank you so much, Mitch. And hey, look, let's not waste any time. Let's get right down to it. We have Seth Lederman, who is the CEO of Tonix Pharmaceuticals. Again, the ticker is TNXP. Seth, how's it going?
Great. Thank you for having me on the show.
Of course. Thank you for spending some quality time with us. I want to kind of dive right into it. We talked earlier about this, but just to reiterate for the fans and for you as well, the World Health Organization declared monkeypox a public health emergency of global concern. How is your company aligned to make sure that we can help this monkeypox situation that we have going on right now?
Thank you, Zunaid. And I'm glad that the WHO recognized the importance of the monkeypox outbreak. It was a big moment for the field. We're developing TNX 801, which is a live virus smallpox vaccine that also protects against monkeypox. We already have very compelling data showing protection of monkeys against the lethal challenge of monkeypox. So this is a very important strategy, we believe. There are 2 other vaccines that are approved, well, for smallpox. One's a live virus vaccine, the other is non-replicating. So we could believe that we fall into the category of the live virus vaccines and that ours is designed to have better tolerability.
Got it. Now, the 2 that you mentioned were already approved for smallpox. Is that through your company? Or is that in the world?
No, we're development only.
Got it.
They're approved by other companies. Our product is called TNX 801. It's in the development stage, and it's a pre-IND product.
Got it. Now, explain it to me like I'm 5 in the sense of how long will it take 801 to be available in the market? And then I would love to know how long it'll take to be available to the mass audience as well, so that people like me, my parents, whoever, can also get access to it.
Well, I'm glad you're asking about the mass audience, because that's really what we've designed the product for. I mean, we think that our product can be, once it's approved, goes through the testing stages and regulatory approval. It's designed to be used all over the world. We think it can be produced at scale and can be shipped and stored in means that are much easier than people have become familiar with than the mRNA vaccines. And, generally speaking, I think that monkeypox has been going on in Africa for too long. It really emerged after smallpox vaccination stopped. And that's, I think, a lesson for the world, that when we stopped vaccination for smallpox, monkeypox got into the human population. We believe that if you reintroduce widespread live virus vaccine vaccination, that it should put monkeypox back outside of the human population and into the animal reservoirs, where it's very hard to eradicate.
Now, I don't want to get it too ahead of myself, but once we go ahead and get it available to mass audiences, are you anticipating for us to need like a booster as well if we were to go ahead and get this, similar to how we've had to get it for COVID vaccines as well, if we decide to, of course?
That's a great question. The live virus smallpox vaccines did not need boosters. It was one shot, and then people typically got immunity for life. There's studies that show protection for up to 70 years. The live virus vaccines are the original vaccine. Edward Jenner developed the first vaccine for smallpox in about 1800. And the vaccines that we're using today, the live virus vaccines protecting against smallpox, are still descended from his vaccine. Ours is designed to be as close as possible to what we know about Edward Jenner's vaccine. So we believe this will be a one-shot vaccination and that it should provide long-lasting immunity. The other thing that's very important about the smallpox vaccines, particularly the Edward Jenner's, is that it also blocked forward transmission, meaning someone who is vaccinated was not able to spread it to other people. And we think that that's something that's very important and something that seems to be missing from the current mRNA vaccines to protect against COVID.
Yeah, and that's what I was going to talk. So if we can, again, I don't know how much on it you can touch, but there are, I would assume, other companies looking to go ahead and get to market with this vaccine as well. What do you believe gives your company the advantage over others to beat them to the market?
Well, we're not aware of other companies developing next-gen live virus vaccines for smallpox and monkeypox. So we think that we're very unique. As a matter of fact, we're really leaders in synthetic biology, because when we recognized the importance of Jenner's vaccine and synthesized it, at the time, it was really at the far edge of the field, at the frontier of the field. So we don't think anyone is working on something quite like ours. And we think that the live virus vaccine has real world evidence supporting its ability to provide lifelong protection and to block forward transmission.
Now, there's been a lot of conversation, obviously, around this company and investors as well. Are you able to tell us of any conversations you may be having with any government officials or any involvement on that side of things to help make sure this is available for the public when the time comes and you get approval, or any of that? Any conversations like that being had that you're allowed to disclose to us here today?
We're a public company, so we really can't make announcements in one place that we don't make all over. So, we wouldn't comment on that at this point.
Okay. Let's talk about, obviously, developing such a vaccine and the other things that you have going on, but I especially want to focus on the TNX 801 here. It's not, it doesn't come for free, right? So it's investment that needs to go into it. What is the financial health of the company as you pursue the vaccine with the 801?
Thanks. The last time we reported cash was the end of Q1, and we had $140 million of cash and no debt. So I think that we're well positioned to get to the next milestones in the development of TNX 801 without a cash constraint short term. We did just recently announce a ribbon cutting of a new facility that we've opened in south of Boston in New Bedford, Massachusetts, which is a process development facility that can also make phase 2 and phase 3 live virus vaccines. So the bulk of that expense is behind us, and we're really excited to charge forward and to meet this crisis head on.
Got it. And then I've just got a couple more, and I'm actually going to turn it over to you in a moment to talk to our viewers. But oftentimes there's a perception about a company that may be misunderstood, that may be incorrect. What do you think investors get wrong about your company when it comes to possibly being an investor in it as well?
Well, I think people are just waking up to the idea that monkeypox is a crisis. I mean, to me, it seems like in the cases outside of Africa, it seems to be doubling each week. So, now the latest numbers in the WHO is 16,000, although I think that it may have included Africa. But when the number of cases is doubling each week, you're in the exponential phase of an infection. And this is really alarming. And I think that what people are waking up to now is that we've been working on this problem for 10 years. We already have compelling activity in protecting monkeys from a lethal challenge of monkeypox. And the benefits of a live virus vaccine and the prospect that we could even, deploy this in places like Africa, where we really should have intervened before, is something that I think people are waking up to.
Got it. And I've got a question in the chat, so let me know if you're able to answer this or not, but are y'all eligible for any grant money? Again, I know you can't talk about conversations you may be having, but if I may ask that vague question of, are you eligible for any grant money from the government or anything like that at all?
Sure. The government has lots of different opportunities to provide funding. Different agencies are interested in this problem. So, there are a number of general announcements and other, basically kind of awards. And I think that now the government is going to prioritize monkeypox more than it previously had.
Got it. And I do want to turn it over to you. Is there anything that you were hoping our viewers would get a chance to listen to? Any topics that you were hoping I would bring up and I didn't? The floor is kind of yours to talk to possible investors here with us.
Well, thank you, Zanet. I think you did a great job in getting to the important points. I think the key thing is we have to fight fatigue. I think people are fatigued over COVID. There's exhaustion, and now we have a new fight, but we have to approach this with the same kind of vigor that we approach the COVID problem with. And even on the COVID front, the current vaccines are kind of losing activity against the new variants. So I think we're entering into a new period where with COVID and with monkeypox, we have to put all of our energy, money, and skill to work to protect people, because this is really a very different world than it was even back in 2019.
Now, I've got a quick question here before we wrap up. Well, you mentioned the fatigue from COVID. Would you be at all concerned that folks may not want to get the vaccine because they have just gotten the vaccine for COVID, and that can kind of impact how many individuals take the vaccine, which can then impact any supply demand issues on that end? Or am I just wild for thinking such a thing?
No, I think you're correct that people conflate these two problems, can't tell the difference between, would wish that they would go away. But the important thing is that, we communicate as healthcare professionals and get the best medicines out as quickly as we can to the market, since we're a development stage company, and work with the FDA and public health officials to distribute these. But I think long term, we believe that if there is a safe enough smallpox vaccine, and if we went back to something approaching universal vaccination for smallpox with a well-tolerated live virus vaccine, that could really protect not only the vaccinated people, but also the vulnerable people from monkeypox. So I think it's something that we really have to consider as we get deeper and deeper into this crisis.
Got it. Thank you so much again, Seth, for having a conversation with us. That is Seth, CEO of Tonix Pharmaceuticals. The ticker is TNXP. Thank you once again, and we hope to talk to you soon with any developments that your company may have.
Thank you.
Take care. That was a fun conversation. This is what we try to bring you guys. Whether you're an investor, you're a trader, Mitch, it's always good to hear from the CEO, the executives themselves about, hey, here's where we are. Here's where we want to go. Here's the health of the company in terms of financials and, any conversation that we may have surrounding that. They said they were eligible for grant stuff. We'll see if, they apply and what that comes out to. We'll try to get more information. I try to get as much as possible, but again, with them being publicly traded, you've got to be a little careful with certain things.
Hey, that's what it's all about. I appreciate you coming on and giving some questions to TNXP and jumping on here right on the call. It's not like we planned this out. We just kid up Zunaid, and my friend was moving, got it on here. Really good interview.
I had to change shirts.
I see you, right? We're looking good, bro. We're looking good. I see you dressed on up. I appreciate you, Zunaid. Like always, covering here some monkeypox concerns, and we've seen some stocks jumping on this. So we wanted to keep the informational edge going. That's why Zunaid jumped on. We'll have you next time, Zunaid. And look forward to more interviews, man.
Appreciate you for having me on your show. Appreciate the chat. And of course, shout out to Zoltan for booking this at the last minute when things were popping. That's the man to go to for Get the Exotic. So thank you. And I'll see you again tomorrow for live trading, pal.
All right, let's go ahead. Let's continue going here. We got into 2 expert opinions today, 1 company, 1 interview. Now we go ahead and get into our next here. We're going to go ahead and dive on in with Michael Lee. In just a few seconds, we're going to play a little promo and get into our next interview. We'll go back into the macro. We had a little bit of talk with Shawn Cruz, right? Now I'm really going to dive on into it with Michael Lee. So give us a thumbs on up if you guys are enjoying today's stream right here on Stock Market Movers, where you guys get the headlines plus some great interviews. Let's dive on in. Let's take a little break, and we'll be right back.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, traders, let's keep it going here. Let's bring on Michael Lee, founder of the Michael Lee Strategy. Welcome back, Mike.
Hey, thank you so much for having me back. Glad to be here.
Super excited to have you on. One of the things I try to do is keep up with your interviews. I've heard you mention this often about the jobs market and really keeping a watch on this. Do you think that we'll get an ugly turn in this job market?
Yeah, the unemployment remains low. Okay, weekly jobless claims are starting to tick up, and my they used to call me a perma bear, or I'm sorry, perma bull, or the Super Bowl. And I don't know that I'm necessarily super bearish right now, but I'm definitely not your overall bull. And so just a brief history, 2014, 2015, we started to see weekly jobless claims drop below 300,000 and stay there basically until COVID, which is unheard of, because 400,000 is your watermark. 400,000, they estimate about 400,000 people enter the workforce on a weekly basis. So if you're below that data, you're doing pretty good. And to be below 300,000 and the 200,000 number we've been hovering, and pre-COVID, we were there in the Trump administration. So you go through COVID, and there's been such an overwhelming shift in the labor force, how it looks, who's counted, who's not counted, and who can file for weekly unemployment claims. So, it varies from state to state, but if you've only had a job for 3 months or 6 months and it's a contract job, or it's not, you're not technically full-time at this job, you're not always able to go in and file for unemployment claims. Additionally, if you work at a company with less than 50 people, you're not included in the unemployment rate. So you're outside what is called the establishment survey. So I'd say the weekly numbers we're getting right now, as well as the overall unemployment rate, do not tell a necessarily accurate picture of what's going on in the overall labor market. And the numbers I would be watching are the quits numbers and the JOLTS numbers. So the quits, what is the quits numbers? It's basically people who up and quit their job. And that shows a sign that people are comfortable, they can get a new job in the labor market. And the other number is the JOLTS, Job Opening and Labor Turnover Survey. That is hitting all-time highs. So right now it is showing double. So there's roughly 12 million job openings at the moment being advertised that are unfilled versus 6 million people unemployed, according to the household survey. So what I would say is that household survey pre-COVID was not the most accurate in terms of exact numbers, but the errors made in the household survey were relative. So if the unemployment rate was, say, 4.4 this year, and 8 years ago it was 5.1, well, those are good comparisons, because most likely the errors in collecting that data were uniform. I'd say now post-COVID, those numbers, I mean, it's hard to make sense of them, because we are entering a recession. And when you get into the consumer confidence numbers, you have the lowest level ever recorded. So you have a unemployment situation where the headline data is showing you a booming economy, yet survey data is showing you some of the worst numbers ever recorded. So what I'd say about unemployment, to tie it all back for me when I was called the perma bull, is that unemployment is a lagging indicator. Okay, so so you only see the bad news after it's already happened. And I don't know that we've necessarily seen the cracks in that headline data, but you have Microsoft reporting earnings this week. And what's been the key driver for Microsoft? It's its cloud unit, taking share from Amazon and Google. In Azure, they announced that they were going to freeze hiring. So if you have one of the most significant, spectacular companies in history growing at an unbelievable pace despite its massive size, so when you're doing hundreds of billions of dollars of revenue, to put up double-digit revenue growth is just mind-boggling. So the key driver of that is their Azure unit, and they are freezing hiring. What does that tell you about the rest of the economy?
Yeah, it puts signs of concern. We all saw how that Bloomberg report on Apple and how that affected the market really quickly. And we saw that downturn last week. I'm going to continue to watch what happens. Do we get an increase of job layoffs or not? Definitely something to watch. Now, we've just recently got a little bit of a dip here from getting above the 400 in the SPY. Do you feel that we could take out those May lows?
I don't see how we don't. I really don't see how we don't, and how the bottom could already be in. But we live in wild times, and a time of financial distortion. vis-a-vis the Federal Reserve. So the Fed's going to raise 75 basis points this week, and maybe we get another 50, but the bond market's already pricing in rate cuts at some point in the first quarter of next year. Okay, what does this leave with the balance sheet? So if you look at the Federal Reserve balance sheet, pre-financial crisis, it was several $100 billion. Throughout Ben Bernanke and Janet Yellen's term, they took that up to $4.5 trillion in the first 18 months of the Trump administration, maybe the first 24 months. They took that down from $4.5 trillion to $3.5 trillion, and we stand at roughly $9 trillion right now. Well, June was the first month of quantitative tightening, which is a fancy pants way of saying they're selling some of the holdings they have on that balance sheet and interest and principal. So bonds that mature and interest that comes in, they no longer reinvest it. So they're selling those bonds, and that's supposed to double in size in September. Or what that does is it sucks liquidity out of the market from the big banks. And so when you are a primary dealer and the U.S. government needs to issue $100 billion worth of debt on a given day, all the dealers sell as much as they can, and whatever they can't sell, they go ahead and hold on their balance sheets, which reduces shelf space for other assets, typically riskier assets. So the argument with quantitative easing, we've only seen it go in reverse for a very short period of time. In 2017, based on the Trump tax cuts expected, improving economy, kind of a change to a pro-growth administration, the market went crazy. In 2018, it was the single greatest year of earnings up to that point in the history of the S&P 500, and the S&P was down. That's when we had several rate raises and we had the balance sheet run off. So we're selling off at 35 billion right now. I'm sorry, 45 billion, and that's supposed to go to 90 billion in September. I don't know what the Fed is going to be able to continue to do or not going to be able to continue to do, because I'm pretty sure we're going to get another negative GDP consecutive quarter over quarter, year over year growth this week, which means we are technically in a recession. So the Fed is not only raising interest rates aggressively into a recession, they're also letting the balance sheet run off, which has only been done once before. So, with all of these things out there, okay, and living through, the 2001, 2002 bear market, the 2008, 2009, living through that, you do get these vicious bear market rallies that just go out there and crush the short sellers. So I don't see how we don't get closer to those lows, if not take them out altogether. But again, if the Fed, if it becomes very transparent by the end of the third quarter, beginning of the fourth quarter, that the Fed is going to pivot from this policy in early 2023, I could see the market taking off into another bull run. So look, this is as confusing a time to invest, especially on a macroeconomic basis, that may have ever existed.
Perfect. Now, one thing that I'm starting to see, and we'll kind of watch to see what the reports point to, but do you feel inflation has topped, or will it just be sticky and hang around? Because a little part of me feels like, maybe we've seen a top, but the question is, will it be sticky and hang around?
So, I don't know that I'm the right person to ask on this. I was team transitory, and that was, fortunately, I have good company there. Lot of really smart, non-political people thought that would pass. So I think housing, for all the criticism the Federal Reserve deserves, they've done a good job at talking about raising interest rates. So that 30-year mortgage went from 3 to close to 6 very quickly. And that's put the brakes on a lot of the housing, which was very, very necessary. Okay. Supply chains have started to heal. I think a big problem for inflation was the rapid increase of oil prices from, say, second quarter last year up until like a month and a half ago, when oil was up at $120 a barrel. We're now in the $105 range. That's a cost push into inflation. And I think the next thing we're going to see is the Putin price hike hasn't really hit us yet. It's going to come during the fall and the winter, when we go to the grocery store because of the lack of food that was able to be planted this year. So we could be in for some shocks. The Fed's going to look at core CPI, which is not an accurate view of inflation. But with all the demand destruction that we have seen, you have to believe that if we haven't peaked, it's got to be close, because one of the cures for higher prices is higher prices. And so that in my mind is the key question. So if inflation is sticky, okay, the Federal Reserve will continue to take us off a cliff. Okay, and why is that? Because inflation not only destroys markets and economies, it tears societies apart. And like, what would you rather have, a recession or a banana republic with the society completely coming unglued? So, they were too late to act, particularly with the balance sheet expansion. The balance sheet expansion should have been dramatically reduced by December of 2020. And they could have kept a very low interest rate policy had they taken that bond buying from 120 billion to a month to 60 to 20 to just principal and interest, and waited with the balance sheet somewhere at 7 trillion, because now we'll be lucky if you can get it from 9 trillion to 8 trillion. I don't even know that they'll be able to get that. And the problem is not so much, we don't have to take that back down to 6 billion or 4 billion or trillion. You don't have to get that to pre-financial crisis levels. But the problem is the next time there's a crisis, you're running out of tools, right? Like it's the Dutch boy with the fingers in his dam. Like, you've already used eight of your fingers. You better use the last 2 wisely. So that's kind of my long-term concern. But I do believe inflation has peaked.
All right, now
I've been wrong about that a lot, so take that with a grain of salt.
Hey, you know how that is. Like I always say, who knows really? Nobody knows really. The data knows. That's what knows. And now let's look at the earnings this week. What stocks are really on your radar, and is there any trends that you're seeing early on in earnings?
Okay, so what I would be looking at for earnings is I would look at not so much earnings performance or guidance, but market reactions to earnings. So I think Facebook is broke as a company. So now it's the metaverse. What they call in tech the addressable market for the metaverse, I believe, is a fraction of what the people in Silicon Valley think it is. That is not going to bail this company out. They have completely. The business model is blown up by the iOS changes. So what I'd be looking at is a healthy sell-off for either Microsoft, Google, or Amazon, and I'd be looking to add those as long-term holds, because typically these high-quality companies that produce a ton of cash, that businesses aren't going anywhere, bottom before the overall market. So if we get a bottom sometime in third quarter, fourth quarter of this year, you can expect 3 to 6 months out these great companies for longer term holds. And then the other company that's out there, I'm not sure when they report, is Spotify. If you look at where the stock is and what they've done, the revenue growth and earnings growth, their customer churn, they're firing on all cylinders. A couple months ago, the CEO bought a ton of stock. I think this is a long-term winner. They're doing well with Joe Rogan, and their paid subscribers, not only are they adding them, they're not turning over as quickly. So it's a good model. I'm a big user of it. I think it's a great stock that I think you buy now, in a couple of years from now, is potentially a double or a triple.
Well, thank you, like always, Michael Lee, founder of the Michael Lee Strategy. Appreciate you touching a wide variety of topics here, and we'll definitely have you back on, Michael.
Thank you so much for having me.
And you're not the only one that uses Spotify, I'm sure. Thank you, Michael. All right, guys, let's go ahead. We're going to start wrapping on up here. I hope you guys enjoyed today's show. We talked a lot about everything in the market. We talked from stock market gainers. We talked about earnings coming up next week, the Fed outlook, gold stocks. We covered Phillips, Newmont. We talked a little bit about Weber Grill, what happened today, World Wrestling Entertainment. And then don't forget it, we talked a CEO interview from TNXP. Thank you, Shawn Cruz, for coming on. Seth Lederman, CEO of Tonix, Pharmaceutical, and of course, Michael Lee, founder of Michael Lee Strategy. I hope that you guys enjoyed today's show, where we give you all the headlines out there and, of course, touch our expert opinions and keep you guys in the informational edge. So give me a thumbs on up. Hit the comments after if you guys are enjoying this show or what do you want to see more or less of. Hope you guys had a great time. I'll see you guys at the close. Up next, you guys got a replay from the Moon or Bust Boys. Go find out what's going on in the crypto environment. And then after that, we, of course, will come back with At the Close. Don't miss that. Joel Conan is back, and I'll see you guys there. Hit the like before you get on out of here, and let's continue going right here on none other than Benzinga.